welcome to Friday, the 4th of September, the first Friday in the month, and we have quite a whole lot to talk about from the global space to frontier Africa. I am Bosin Omofaye. My panel is Ayode Jebo, the CEO at Afrinvest Securities, the CEO and founder at Rich Frontiers Management, Ali Kansachu, on the panel also today, as always. Thank you. And of course, the banking analyst at Vetiva Capital Management, at investment banking and securities trading firm, Joshua Odebisi. Thank you, three of you. We appreciate your time.
Thank you.
Thank you, boss.
It's a good Friday, but it wasn't a good Thursday for the global market space, with the ugly Thursday, as it's been called variously, of the major meltdown for major markets. That spooked the South African markets, the market with the strongest correlation with the rest of the emerging and global markets, 2.40% in the red for the GSE on Thursday. Nigerian market sidestepped all that route and gained 0.2%. The big banks are now reporting left, right, and center, and it looks like we are ending the banking reporting season for the Nigerian space. Ivorian market 0.16% negative. Egyptian market took 0.3% beating, and the Kenyan market up about 0.2%. Look at the Kenyan stories, top stories. The private sector activity PMI falls to 15.0 reading in August. PMI in Zambia, in Mozambique were still below water. That's 50.0 reading. In Rwanda, the brewer Bralauer says his PBT was up 61% despite a drop in sales. It looks like with the lockdown, Rwandans were drinking and having some nice time behind closed doors. Tanzania shillings is seen steadier next week because of inflows expected from tourism and agri exports of commodities such as coffee. That's according to AZA. And Total says it has no plan to leave Tanzania. The petrol retailer says despite the sale of some outlets in the country, that's a normal asset management process, and has no plan of leaving the East African economy. Ali, let's start with the PMIs.
Yes, so, PMI above 50 is typically signaling a degree of expansion in the underlying economy. And 53, whilst it's declined from the previous month, is a positive number. So I think that my takeaway is better than I expected. But I would like to see underlying economic data, because I think the economy has been, in fact, shrinking. So it's interesting that there's a degree of optimism amongst the purchasing managers who represent this PMI. Zambia 43.4, this is in line with the travails that we've been seeing in Lusaka. There's been all this policy-making volatility with the upending of the central bank governor. We've had a very adversarial approach with the mining sector, Glencore being the latest caught in the crosshairs of State House. And this has been notwithstanding a bit of a gradual recovery in the copper price. Zambia very correlated with copper. But I think overall, the financial restructuring that needs to be done is the overwhelming and overarching point. And until they reorganize themselves, it's going to be difficult to see any significant recovery. Mozambique below 50. Again, it's tough down there, down south. These economies are like sucked in the wave of South Africa. And we've had that hard lockdown, which is now easing in South Africa. Interesting data about Bralirwa. A revenue line was kind of flat to slightly down, but profits were up large. And what I find interesting is in the comparison with East African breweries here in Kenya, and breweries is in Uganda and in Tanzania, they reported a very sharp decline. So maybe these guys have got good digital or good distribution. And like you said, the Rwandans have been sitting at home and partaking in the beer. And that's why they've been so well behaved and not misbehaving with the curfew.
unlike the situation in South Africa,
exactly,
which is just the direct opposite with the alcohol and whatever incidents of rape, increased domestic violence. We
That's
haven't had anything close to such in Rwanda, by the way.
No, but Rwanda post-genocide is a very disciplined society. I mean, if you look at crime, I remember being in Kigali and one of the government ministers making the point, dropping me at 2 in the morning and saying, just walk back to the hotel. And I was kind of petrified. But of course, Rwanda is a very, very safe city. And that's why they're going to do very well with this conference tourism business. If you can walk around a city and you feel very safe, that makes a big, big difference. Tanzanian shilling, the point you are making about tourism was interesting. Tanzania has said it's been open for tourism throughout the pandemic, for most of the pandemic. And the question is, are they getting tourists, international tourists? I haven't seen the tourism numbers. Obviously, Asa might have seen something. I saw a few brave Swedes turning up and being interviewed, but the challenge for African tourism is even if you open up, it's about the tourist getting travel insurance, right? And no tourist is going to travel, no package tour is going to send tourists without some level of insurance. And given the pandemic, it's quite critical. Total, that's interesting. They're always in the process of divesting. They did very well in Kenya, by the way. They reported half-year results, which, although they did considerably less revenue because they did not participate in the bulk oil buying, what they've done very well in Kenya, and I'm sure they're doing it in Tanzania as well, is forecourt revenue and monetization. They've really worked hard around not just selling fuel, but selling you a burger, a takeaway, as having a small supermarket there, fast food. And I thought it was interesting that they were reiterating a commitment to Tanzania, because again, in Tanzania as well, you've had a lot of policy volatility, and particularly in the mining sector and in a couple of other sectors. So I think that announcement was also signaling to the government, we're here to stay. And we can take a little bit of noise.
Nigerian banks are also here to stay, going by the numbers that we saw over the last couple of days. It's been a very busy week for Joshua Debisi and his colleagues, Ayode Jebo and the rest of Nigeria's big banks reporting earnings since Monday. Yesterday, we got Zenith Bank reporting second quarter dividend, interim dividend 300 cover. Overnight, we got Access Bank and Fidelity Bank reporting. The Nigerian president is approving an upgrade of ICT infrastructure, of Galaxy backbone. But a very interesting story from Ghana, where the stock exchange in Accra says it's opening its doors to state-owned enterprises for listing under the SIGA arrangement, which is the State Interest and Governance Authority, an agency created to ensure that the Ghanaian authorities get the best of their investments when there's a good amount of privatization and liberalization process, by the way. And MTN Ghana suffered a bit of a beating yesterday when the High Court in Accra threw out the suit that the telco brought against the telecommunications sector regulator over monopoly. Let me start with Joshua Debisi about the bank earnings. Which of them are you touching on very quickly for us?
Well,
the one that's given you sleepless night, by the way.
Well, okay, so I think definitely the most interesting one so far was Zenith Bank. Obviously, they released theirs yesterday, and the headline figure that everybody is impressed by, I think, is the 103 billion profit after tax. But I think that needs to be put into a little bit more context, because overall, their performance was actually a little bit more flat up until that line item. And the reason why there's such a big improvement year on year is that the tax charge for H1 is just 10 billion or so. And this is down to a few interesting things, but I think what it signifies is that, they decided to take a little bit of their write backs in the second quarter, which helped to boost their profits. But overall, I mean, gross earnings was up 4% year on year to 346 billion. They did pretty good. Non-interest income was up by about 10% year on year. They did about 129 billion there, even though charges, all the bank charges and things have sort of reduced significantly. But of course, like we always expected, the increase in the exchange rates has really boosted their performances. And so that really, helped the bank, to, push things forward. But overall, it's just a pretty impressive result. And then number one in terms of profits for the half year anyways.
Adedeji, a quick one. Thank you, Joshua. Let's check in through the Access Bank earnings that came late in the evening.
Yes. So for us, Access Bank too, we saw the profit was also impressive. At least from their top line, we saw that their top line also increased slightly. But when you check their profitability declined slightly. Impairment charges is what we've seen that across all the banks, which is expected as an increase significantly. And based on dividend yield, we could see that for most of the looking at Access Bank based on current price, they still been able to pay the 20 kobo, if I recall, 20 kobo. So when you look at the other banks, 30 kobo, that's GTB, Zenith. So we feel that that's also very positive. So they've sent a very strong signal to the market that despite the COVID impact, and we feel that I think the worst is over. For a lot of them, also most of the loans that they've restructured, moratorium that they have given. So we believe that from that, from the third quarter, we would see that improvement. We'll see that improvement in the earnings of the banks. So we expect to see more write-backs from most of these banks.
Great. Interesting. I'm sure we'll have a whole lot to think through the weekend as we go into next week when September fully kicks in. We put all the bank earnings behind us, then we can do a bit of a look ahead. But let's check in with the Southern African market. The GSE yesterday, as we saw earlier, pulled back more than 2%. The second quarter GDP's report will be out next week, Tuesday. Meantime, Eskom is implementing stage 4 load shedding round. More than 4,000 megawatts is being shared. Rationing is the order of the day. This is one of the worst periods for South Africa in terms of electricity. Meantime, Implats, South Africa is reporting about 400% earnings jump because the rand was weaker and metal prices were hotter in the first half of the year. So New Gold, therefore, is listing an additional 100,000 platinum debentures at about 153.20 rand on the GSE. Eswatini says its fuel prices up 80 cents across board. Nigeria just implemented a similar uptick in petrol prices, but folks are not so pleased with what they're finding at the pumps. The government announced 151.56 naira per liter. What was about 160, 162 on the street. Ali, this is interesting where we're finding ourselves now with petrol prices, crude prices, and the energy crisis, generally speaking. When you talk about electricity, Nigeria is implementing higher tariff at the same time when petrol prices are heating up.
Yeah, these are very important points. Let me give you some contrasts. Somewhere in Kenya today, we are more than 60 to 65% of the price we pay at the pump is tax. In Nigeria, I believe you have very, very low tax. In South Africa, I think there's room to increase the tax. So you have an interesting scenario, and it's a very politically charged situation. if you know, like we saw previously in Nigeria, I think under President Goodluck Jonathan, when they tried to raise petrol prices and everyone came out on the street. So, you know, governments, it is low-hanging fruit, but I think you've got to do it very incrementally so that the consumer does not feel it in one single hit. So it's a very sensitive way that governments can raise more revenue, but they've got to do it cleverly. They just can't do it in one hit because that just tends to cause a political storm. With respect to electricity prices, I think that's a slightly different issue. I think electricity price tariff increases, which are coming for sure, and I believe they've already come in Nigeria, and have to come in Kenya, and have to come in South Africa. But it's really a consequence of the singular failure of these big electricity companies in our countries to manage their affairs properly. And I think that, therefore, when we're looking at ESCOM, we're looking at Kenya Power, we're looking at other power companies across the continent, it is all about the failure of our corporate governance, the failure to apply the money where it should be applied. And the problem becomes intractable because of the long lead time. So now you're seeing this situation in South Africa, level 4 load shedding. But there is no silver bullet. It's going to get worse before it gets better because they still haven't implemented the plan, which is going to mean they can catch up with the shortfall. So it's really very, very worrying. It's very alarming. And I think it speaks to the dysfunction of governments and state-owned enterprises in what is the single most important sector that we have. Let me touch on quickly on implants, up 400%, weak rand, strong metal prices, the platinum debentures. As we've said before, this is the best of times for metal producers. Prices have been rallying sharply. We're at record highs in gold. Well, we've come off the record 4 weeks ago, but we'll go back up there. But if you look across that complex, it's a sweet spot, and we should continue to see more good profits and more issuance on that. South Africa GDP, which is going to be released, is going to be simply dreadful, as we all know. But I think we're in a situation where the market can look through it now. We know what to expect. The market has been attuned to think of the number, and probably will get a positive upside surprise, knowing how these markets work sometimes.
Interesting. Thank you, Ali, for squeezing energy story together there, from electricity to petrol and all of that. How do you think, Ayodeji, how do you think market will treat these earnings trading to today's Friday? What are we likely to see today moving through to next week when we've all fully digested these numbers?
Okay, so thanks. I think based on this result, it's in line with the expectation of, you know, we've seen some of the management accounts for most of the banks, and we're also expecting that it wasn't going to be very disappointing despite the COVID-19 impact. So we've been seeing that positive reaction in most of these top bank stocks. Like I mentioned earlier, just to correct, Access Bank paid 25 kobo, translating to a dividend yield of about 3.9%. So when you also look at that relative to fixed income yield, so investors will still be better off now. Savings, interest on savings account is now down to 1.25% minimum. So you would investors will begin to look for alternative, because we know for a lot of then, from the 3.75 interest rate on savings accounts, investors move their funds from investment to their savings account to enjoy that rate. And now there will be the reallocation of their resources and moving towards those assets. So we feel that markets will react positively to this. Despite the COVID-19 impact, the banks were still able to hold on, and they were still able to pay interim dividend. And even I think the list, when you check the dividend yield for GTB, is maybe around 1.7%. It's still almost a 90-day T-bills I think is still or is around that rate. So we feel that, and this we feel the worst is over in Q3. Most of these banks would also have maybe more write backs, and they'll continue to press on their loan and advances. If you check across the top banks, they grew their loans and also their deposits in double digits on a year-on-year basis. So if we feel that that trend would also be sustained, given the low interest rate in the environment. And yes, interest rate on savings account has reduced. Yes, we would have, though not done the exact impact analysis, but we have some impact on their cost of funds, especially the likes of Zenith Bank. When you check their CASA, about 90% of their total deposits. So you would that will also help boost their earnings. So we feel that towards the investors are investing towards the long term, and with that expectation in mind, and at these current price levels, if you look at them based on price to book multiple, they are trading at very significant discount relative to what they were last year. And if their profit has not even reduced despite the pandemic, then that would also be a major incentive for investors to buy for the long term.
Okay, we appreciate that look ahead. A quick look in with Joshua before we touch on North Africa and wrap it up. Josh, are you seeing, or what are you seeing? Let me rephrase that. What are you seeing in terms of the costs within for these banks during the period in terms of personnel costs, other costs, donations, and what have you? Are you seeing heavy numbers?
Well, okay, so the thing is, we've seen a little bit of a pattern where operating expenses have increased pretty significantly year on year, but this is not down to things like personnel costs. Obviously, cost of operation you would expect would, moderate slightly because a lot of working from home has happened, and some offices are working at maybe half capacity or 1/4 or 1/3 capacity. But what we have seen is an increase in administrative expenses, an increase in AMCON charges, and an increase in deposit insurance premiums. Now, this is very important because obviously, these charges are directly linked to the bank's balance sheet. So for a bank like Guarantee Trust Bank, for example, we've seen a pretty significant increase in their deposits. And so this has translated to an increase in deposit insurance premiums, but also the charge itself has gone up. Now, all these, from Guarantee to Zenith Bank to UBA, all of them have recorded pretty, strong deteriorations in operating expenses, which, runs a little bit counter to what you would expect, but it's not about, personnel or even, your regular operating expenses, but your special one-off charges. That's what we've been seeing as a pattern in their books. And I think for some of the banks, they also thought it'd be prudent to take on these charges earlier rather than later, so that all the big impacts would be felt in one quarter rather than trying to spread it out, so that if they have a better performance in Q3 or Q4, it reflects a lot better on their books because they've taken all the big charges in the previous period.
Great. We thank you so much. Let's wrap it up with the North Africa. Of course, talking about the banks. Botswana, we saw Standard Chartered reported a better than expected numbers yesterday. That was a very big bank there, with 109 million Botswana pillar in terms of profits. So very good numbers there. But talking about Egypt, Moody's says a trust that rating says Egypt's economy shows efficiency, good policies, credit profile, reflects a diversified economy. That's good. Meantime, LG's boosted its investments in Egypt, $10 million this year and $40 million in investments over the next 3 years. We think LG wants Egypt to produce screens for some of his products, as it were. Meantime, Egypt's PMI was edged down to 49.4 in August. And Tunisia has approved the listing of Maghrebia Assurance. That's an insurance company that could happen anytime soon. Ali, give us a minute to wrap up from the north.
So, you know, we've spoken about Egypt for a while, and I think Moody's are articulating in their ratings commentary exactly what I've been saying, is that, you know, you have policy-making certainty, you have joined-up thinking, and really, if you are in a situation like we found ourselves this year, I can't think of any other African government that I would prefer to be in the cockpit than the Egyptian one, because they have an ability to think through, they have an ability to, they've brought certainty to the policy-making process, and at the same time, they know how to attract foreign investment. And that's why you're seeing the currency rally now. I think it's been strengthening of late. And that's why if somebody was to say to me, where would you park your money on the continent? I would park it in Egypt first and foremost, and everything else would come a distant second or third. And I think that Moody's confirms that. LG, further statement of what I'm talking about. You know, if you want to pump in $10 or $40 million, your first destination is going to be Egypt, big market, more than 100 million people, and embedded in the African continent, so a great gateway coming in from the north.
Interesting story and interesting analysis from all of you today. We thank you very much. TJIF, Ali Kansachu, CEO and founder at Rich Frontiers Management. Have a great weekend. We thank you so much for being on Frontier Africa Reports. Joshua Debisi, you need to grab some sleep. You need the whole weekend, but I see a whole lot of work to do for you with the big banks, big earnings right there on your desk. Thank you so much from Bativa Capital and, of course, Ayode Jebo of Afrinvest. Have a great weekend, everyone, and see you next week.